So let's look at another popular pension destroying fund. I'm going to look at the UK Equity Index Fund. All in all, in theory, should be good. It's an index, tracks the UK. Let's look at how it's done and why it stinks. Well, total return percentage as of 31st December 2023, over 5 years, 6.64%. Thanks for nothing. Now, I say this in the context of when our American counterparts, whose funds I could have put into a UK SIP or ISA, well, the NASDAQ was up 55% and the S&P 500 up 25%. And you might say to that, yes, but that's American. No, you can put it in your SIP and ISA in the UK. Oh, but there's a currency risk. Works in your favor. And if it didn't, at least you've got some diversification on currency as well, especially if you're holding over the long term, which you should be. So what is your reason? Oh, well, you've got to pay 1% more. Oh, okay, so you take the 6% return for not having the 55% return. That makes sense. Well, you might not have done a NASDAQ tracker. It might not have been suitable. Okay, go for the S&P 500 then, only 25% up. Yes, but surely, Alpesh, over the 5 years, the UK one did, no, it didn't. It didn't do better. In fact, pretty much over any rolling 5-year period since the Second World War, it hasn't done better. So why does it exist? Well, it exists to earn fees for fund managers. Let's dive a bit deeper into not only that, but let's have a look at what the holdings are. What are the holdings? Well, again, it's a UK fund with billions under management, or hundreds of millions under management. Therefore, there's very few companies it can actually invest in. Okay, so no wonder the poor thing's not doing well. First of all, the fund managers have got their hands tied behind their backs because they're only told you can only invest in UK companies. Then on top of that, they're given a hell of a lot of money, so they can only invest in very few of them. So they got to pray. They got to pray that Shell, AstraZeneca, HSBC, Unilever, and BP, okay, Rio Tinto, Diageo, Relics, Glaxo, and Glencore do really well, because those are pretty much what they're betting the whole caboodle on. And guess what? We live in a world of Meta, Microsoft, Alphabet, Amazon. Oh no, we can't have any of those because they're not in the remit. Change the bloody remit. Stop offering this stuff. Okay? It's not in the interest of your clients. Performance says it all. Go by the performance. So I'm sorry. It's another one which wrecks people. Now, I said in 1999, in my very first column in the Financial Times, I'm selling all my UK holdings and only buying US ones. Now, that wasn't because I've got some proclivity towards the United States. It was just simply because I had a lot more then to choose from, a lot more companies to choose from. It meant that, at that time I had 40 years to retirement. I've taken this from Goldman Sachs Wealth Management. It meant that I could thereby choose out of 10,000 individual companies and make sure they ticked every single box. You know what the companies these fund managers have done and picked? They don't tick every single box. I need value ticked, growth picked, income ticked, cash flow picked, momentum, Sortina, and I need 10,000 companies to whittle that down from. And the reason is, companies are a collection of individuals with CVs who want to manage your retirement effectively, or your children's inheritance. So you need to look through a lot of CVs and pick the very best, not just spray and pray that hopefully these guys will get it right. So, sorry, no, this is a fund which has been destroying. And now you've seen the website and you know how to analyze it yourself as well.